You're listening to Road Dog Trucking.
Drive. Coming up after this show is Charles Gracie, so stick with us right here on Sirius XM 146. Joining me this segment is Stas Margaronis, California ports reporter with the American Journal of Transportation. We're going to talk about global trade shifts reshaping North America. Stas, thank you for joining me today.
Thank you, Leah.
Personal question, are you in California? What leads to the interest specific to California ports? Volume of activity, I'm sure, but tell us more.
Sure. I cover the California ports, which is Los Angeles, Long Beach, and Oakland are our main ports. The ports of Los Angeles and Long Beach are the busiest ports in the United States. So about 36% of U.S. exports go through the ports of Los Angeles and Long Beach. In terms of trans-Pacific trade, that's even higher.
Well, that's a good reason to have honed-in coverage, right? Direct from you. Global trade lanes are shifting, and I think we're going to talk a little bit about Canada. They're reworking trade strategy with China, and this has been in the news a lot, and I don't want to shift the conversation from the topic at hand, but earlier in the show, we had a reporter from the JOC, and we were talking about, trade agreements, about the war. I mean, do you think that the tariffs and all of the upset from that, does it complicate things even more in light of the conflict that we have right now and in light of global relationships in terms of, Canada, China, the subject at hand?
Leah, that's a spot-on question, and the answer is yes. It makes a bad situation far, far worse. And the reason is that it creates more uncertainty, and it's creating a crisis of confidence in the United States as a reliable trading partner with everyone. I was in Japan 2.5 weeks ago, and I met with the president of the Japan Economic Federation, the Keidanren, and they are very, very concerned about the situation in the Strait of Hormuz because Japan gets about 70% of its oil through the strait. You mentioned Canada. We have been duking it out for reasons that I do not understand with Canada. Canada is a strong, good, long-standing trading partner and ally of the United States, but we have driven Canada into China's hands, and you referenced some of that. The Prime Minister went to China. They have negotiated new deals to expedite oil exports to China. They're going to be building new pipelines on the west coast going through Vancouver and Prince Rupert to sell more oil and gas to China. And at the same time, China is going to be building its new BYD electric vehicles. They're going to start selling them in Canada, and Canada is going to be a major consumer of Chinese EVs. So we are losing as China gains.
That sounds significant. That doesn't sound like a small thing. It really sounds like a major agreement and shift.
Yeah, and really, Prime Minister Carney tried to negotiate with President Trump, and he kept batting the Canadians away. And so the Canadians said, well, okay, if you don't want to deal with us, the Chinese do. And so we're going to start seeing a lot of Chinese EVs in Canada, a lot more trade between Canada and China. That had been complicated for some time because of concerns about Chinese agents in Canada oppressing Asian and Chinese nationals living in Canada. Thanks to Trump, that situation is now patched up, and there's a very close relationship developing between Canada and China.
Do you think this is that, should we mend fences, improve the relationships with both of these countries? Do you think this agreement with Canada and China can be, is it work in addition to what they could be doing or would be doing with the U.S., or will they say, sorry, U.S., we're now married to China. We're not getting involved with you again?
Well, at least under this administration, Leah, I think that ship has sailed. We've been hearing a lot of feedback. The Trans-Pacific Maritime Conference was held in Long Beach in March, and that is a venue for many importers and exporters to meet about trade, about shipping agreements. And I can tell you that the foreign experts that we heard from are saying, like the Prime Minister of Canada, we can't deal with the United States. We need to start looking in other fields. And one of the areas that this is really having a negative impact is on agriculture, Leah. The agriculture exporters for almonds are losing market share because we imposed tariffs on China, and they retaliated by sourcing almonds in Australia. Soybeans, we've lost soybean sales. China is now sourcing those soybeans from Brazil. The Agriculture Transportation Coalition, a coalition that meets every year in Tacoma, Washington, reported last year that beef exporters had lost $1 billion worth of export sales, U.S. export sales from China. So at this point, we've really created a mess for ourselves. In the short term, I think the answer to your question is until there's a new administration in Washington in 2028, I think we have lost.
The commodities, or the industries that you mentioned in terms of growth, the soybeans, the almonds. I live in Florida. It makes me think about Florida's orange production, which has decreased over 90% in the last 20 years. And again, living in Florida, which almost feels sometimes like you live in a bubble, a lot of that land and where they what they used to use for that entire industry has been developed. It's it's real estate. They've kind of shifted. So does the soybean and the almond industry just wait until 2028, or are they selling this land and shifting gears? And are these permanent changes from your perspective?
Maybe not. We still have a lot of agricultural land in the United States, including in the San Joaquin Valley of Central California. There are some incursions along the lines that you described with real estate and also with warehousing, but we can still compete. The problem is that we don't have the leadership right now. Agriculture has been a foremost commodity for the United States in terms of exports for decades. And we've really abandoned the farmers under this administration, and I don't get it. We have a lot to offer. We have a huge infrastructure along the Mississippi River that helps flow our exports out to the world. Soybeans, wheat being two of them, almonds, as I mentioned, and many other products. That's not going to happen if we continue to have adversarial trade relations with our close trading partners.
Is that ultimately what it means for shipping demand? I mean, is it simply, that it will decrease or drop?
So in terms of imports, we're still a major importer. So in terms of volumes at our ports, those volumes on the import side are likely not to go off a cliff, at least unless there's a recession this year. The big problem is that exports are problematic. Now, we are finding alternative markets, but one of the alternative markets that we were looking at was in the Middle East, which now, thanks to this war with Iran, is now shut down. So that complicates the thing. And Leah, part of the problem is you've got to have professionals making decisions on trade. When you start to have ideologues making those decisions instead of professionals, you get the situation that we have right now.
Stas Margaronis, California Ports reporter with the American Journal of Transportation. We're going to talk more about the impacts here with Canada, with global shipping, and of course I'm curious about what he thinks for freight as we head into, we started Q2, but you understand what's going to happen. 888-876-2336 if you want to get into the last word. Otherwise, Stas is going to take it from you. We'll be right back after our last break. Stick with us.
Go to @RoadDog Trucking on X and check us out on the Sirius XM app. Free with all of our trials and popular plans. Regulations
And perspective for you joining us. This segment is Stas Margaronis, California Ports reporter with the American Journal of Transportation. We've been talking about trade ultimately with Canada and China and some huge shifts with those two countries. When it comes down to it, between those changes, have we talked about the total impact with U.S. supply chains? Have we exhausted that point, or is there more to discuss there? I mean, is there more impact that truckers and rail operators need to be monitoring?
Yeah, Leah, so, when things go down, they go down all along the line. If our imports have volumes at U.S. ports have been down for the first quarter of 2026. The Port of Los Angeles reported a couple of weeks ago at its briefing that they actually had a volume increase of about 3%, but they had been down by double digits the month before. And Long Beach and Oakland on our side are having similar problems. The overall situation has been complicated by the situation with the war in Iran, because now we've got higher fuel prices, which means diesel for our truckers. They're getting killed on this right now. And I can't imagine I know it's not a good thing. I talked to a harbor trucker yesterday who actually told me that he had been in Nevada at Tesla's semi factory, and he has ordered 3 battery-powered semis from Tesla, which he expects to take ownership at the end of 2026. So some of our truckers are starting to look at EVs at battery-powered as an alternative. But the question that you posed, Leah, is that when these prices go up, the supply chain gets hit. And as you know, a lot of our truckers were having a tough year before all of this happened, the tariffs being a big complication. With fuel prices and diesel prices going up, it's making a bad situation worse, and we would expect to see the same sort of collateral damage on the railroads. So
in terms of changes, in terms of decision making, this seems to be complicating, as you mentioned, an already unstable area of the industry.
Yeah, I would agree. And Leah, I mean, the problem that we all face in business is uncertainty. And when you can't decide what your situation is going to be for the rest of the year, and it's April, that's not a good look.
Very true. So I guess the current state of the ports, there was some increase, but ultimately, are they losing share to other regions? What are the challenges there?
I think the bigger challenge, Leah, is that a lot of countries that were doing business with the United States are now looking for an alternative source. And that is a problem for our exporters, particularly. We still have demand for imports, which is likely to continue, but it gets complicated by mixed signals from the Trump administration that it's going to do a deal or it's not going to do a deal. And just as an example, going back to my trip to Japan in March, when I talked to the president of the Keidanren, he said to me that Japan thought that it had a deal with the United States on trade issues related to Japanese exports, primarily of cars, last September, and then the Trump administration did not follow through on the agreement. And they were sending people to Washington to try and get that situation sorted out. But when you start to have situations where people no longer can trust your word, then they start to look elsewhere to do their business.
Well, I think in recent years, we have seen freight moving to other ports. Has that continued outside of the trade issues with other countries?
So one of the areas that we've seen movement to was to Mexico, Leah. And Mexico has been a big beneficiary of some of our losses with imports coming into from China to West Coast Mexican ports such as Manzanillo. That situation was developed in part to evade tariffs that the Trump administration had imposed under a previous administration, and we had the USMCA agreement, the free trade agreement between Mexico, Canada, and the United States, which is right now up for negotiation. And until we get a clearance on what's going to happen with that, we don't really know how that trade flow is going to work between the three countries, in addition to the other issues that we've had. But the answer to your question is Mexico has benefited from some shifts. There's been some shifts going through the Panama Canal that have sometimes helped our East Coast ports. And I would say the East Coast ports, East and Gulf Coast ports, were getting some benefit up until this war happened. And the problem that we got, Leah, is that ships were going through the Suez Canal up until Israel went to war in Gaza. And then the Houthi allies of Iran were attacking shipping, so the Suez Canal was no longer viable. We started to have ships going around the coast of Africa. That added many days and additional costs to get product from Asia to the East Coast and to the Gulf. So they're having a problem there that we thought was going to be ended with. It was actually, before the war started, ships were starting to go through the Suez Canal again. That's now off to the end of the year. So what that means is that while the East and Gulf Coast ports have this uncertainty with trade, they also have this uncertainty about the shipping routes. That's not a problem for us on the West Coast. Product that's coming across the Pacific is not impacted by what's going on in Iran and the Straits of Hormuz. But things are backing up. Things that were being delivered in Iran, in the UAE, those things have started to back up in different places. And those backups could start having some impact on shipping to the U.S. somewhere down the line if there's not a speedy end to the war.
Stas Margaronis, California Ports reporter with the American Journal of Transportation, and knowledgeable on all of the other things as well. Where can folks find you if they want to read or hear more? Leah,
www.ajot.com. www.ajot.com. And thank you very much for your interest and attention.
Appreciate you joining me, and I'll find you at AJOT.com.
Thank you.